Now, yesterday, we shared the income methods on Newmont Mining, NEM, from the Fusion portfolio at Radioactive Trading. The stock has been performing well to open 2023. We've been in this position since around October, but we showed recent movements using income method number 4 and income method number 6, a riskless spread trade from the blueprint that ended up bulletproofing the position where we have no risk to the downside and leaving the upside open. Now, we also have two other stocks that aren't as strong to open 2023 in that portfolio: Schwab, Charles Schwab, SCHW, and Arista Networks, ANET. What can be done on those positions using the income methods in the blueprint? The power of the income methods, of course, is to reduce the initial low risk of the preferred married put structure, lower the break even, get income, and potentially bulletproof the trade. There are 12 different income methods, as some can be used in up markets, some can be used in sideways markets, and some can be used to help your position in a declining market. Yesterday we covered the good, the NEM position that since 2023, the first few days, is up $4.30 or 9.1%. Great opportunities. The married put is a bullish structure, so we had good opportunities. Charles Schwab was up, down, and then up again. Not a lot, but a reasonable amount. ANET, we're going to discuss that one a little bit later in our third part of the series, but that's down about $10 or 8.1% since trading started in 2023. Well, where do they stand right now? Well, here's Charles Schwab and ANET charts since they're opened in Fusion. The 10-day chart for Charles Schwab. Why 10 days? Well, we opened the married put on December 27th when the stock was trading at 82.04. We see some movement up, some pullback at the beginning of January, then movement back up again, and then another jump. We had a chance to do two income methods, one a couple of days ago and one actually today on Friday, January 6th. ANET, you see, has been open for a longer period of time, since about October 4th. We look at the 3-month chart here and see some income methods that were done as the stock moved up, but now it's pulled back from that high, down about $31 from the high around 142 or 22%. Again, as I mentioned, we're going to cover that one in the third part of this series. Let's talk about the meh position. Charles Schwab was opened on December 27th. Two income methods have been applied since then. As I mentioned, one on January 4th and another today on January 6th. Now, the initial position carried a risk of 7.1%. We've been able to reduce that down to 4.7%. And here's our profit and loss chart that we have for Charles Schwab right now after the two income methods that we used. You can see here in the Fusion postings an income method number 4 and the income method number 5. But you might be asking, what is that madness? What was that profit and loss chart we saw? It looked a little bit weird. Well, let us start from the beginning. The initial married put for Charles Schwab was opened on December 27th. We bought shares of stock at 82.04. At the same time, following the proper structure discussed in the blueprint, we bought the 16th of June 82.5 put for $6.75. The total invested into this radioactive trade was $88.79, but the put gives us that floor where we're guaranteed, even in the worst case scenario, if Charles Schwab falls to $1 per share, to get $82.50 back. Maximum risk, $6.29, the difference of our capital outlay minus our guaranteed exit, and that comes to 7.1% of the cost basis. And to start the trade, the upside is infinite. Well, the stock did move up a few days heading into the new year, and then, of course, on Tuesday, January 4th, the stock lagged a little bit and then fell. But then, on Wednesday, it moved back up. We were able to do one income method. And let's take a look at the first income method. Now, you've already seen this move, especially if you watched the other presentation for Newmont Mining, married put adjustments on the good. Income method number 4. On January 4th, Schwab was trading at 83.43. Not a big move from our purchase price of 82.04, but remember we had the 82.5 put, so now the stock is above our put strike price. We're going to use our second working asset. We're going to sell to close the June 82.5 put for 610, and then we bought to open the 16th of June 85 put for 705. We moved the put up in strike price. Income method number 4. This is the only income method that's really done at a debit. We paid 95 cents for this transaction. But now we're guaranteed to get a higher payout of $85 instead of $82.50. Essentially, we paid 95 cents to get a higher guarantee of $2.50. This reduced the total risk to only $4.74 or 5.3%. And remember, that is in the worst case scenario. If I hold Charles Schwab all the way to June expiration, make no income methods or adjustments on the position, accept no dividends, and Charles Schwab happens to be trading below $85, that's about the only time we're going to realize this maximum loss, now lowered to 5.3%. Well, Charles Schwab continued up. And of course, why 12 income methods? Because it gives us options. It gives us more tools in our toolbox based on the different scenarios. Now, we already know a simple income method number 1, selling a call against the married put position. Essentially, a covered call position, but with coverage and a limited loss. In this case, on Friday, January 6th, in the morning, if we sold that income method number 1 about 14 days out, the January 20th 85 call, we'd collect around $1.94 or $1.95 in premium. This would lower the maximum risk down to $2.80 or 3.2% per share, and we have a capped upside. But if the stock's trading right at $85, we could make around $319.50 or 3.6% on the position. Now, on the NEM trade, we discussed a riskless spread trade that was used in the Fusion portfolio to generate some income but leave the upside open, solving the capped gain of this income method number 1. And income method number 6 for Charles Schwab, we'd sell that same 20th of January 85 call for $1.94 and buy a higher strike, let's say the 87.5 for 90 cents. This gives us a net credit of $1.04 for this transaction. It's a bear call credit spread, but done in the proper structure, we have no monetary requirement. The broker just sees this as a covered call against our shares of stock with an extra long call purchased. In this case, the risk would only be lowered to $370 or 4.2%, but we still have an infinite upside profit potential for the case of more large movements in the security. Which one to choose? Schwab is starting off 2023 with good moves. The financial stocks appear strong overall. It may have a surprise upside if there's good economic news that comes out, but these are not typically the stocks that have large spikes, as we saw with NEM as the mining companies gold and silver became really strong in favor. We have already reduced the risk, and the stock is near our put strike price, helping us take advantage of the at-the-money bell curve. What I would like to do is lower the risk a little bit further. I'd like to maximize potential profit in the short term. I don't necessarily mind a capped upside at the right strike price. And I'd like ways to manage the income method I use without potentially an added cost if my expectations are wrong and the stock suddenly does spike. As we showed yesterday, that thought process is the CEGA model that we use, the decision-making process that's described in the blueprint for each of the 12 income methods. C, what are the current conditions? Schwab opened 2023 well, pulled back, but then recovered and kept strength. We're not expecting quick jumps in this stock, but again, it could happen. Expectations. Financials seem to have interest across the market now. Bank of America, Wells Fargo, USB, and others. We realize that could be undone with rate hike comments or other economic factors, which is why we're using this as a married put trade, of course. The goals for this particular married put, I'd like to get income to reduce the risk further after we already used income method number 4. I'd like to try to maximize potential profit via the income methods in the shorter term. And if my expectations are wrong and the stock does spike, I'd like to have various ways of beneficial management. Now, of course, that's discussed in the blueprint for all possible income methods. Now, the action, based on my CEGA model, the conditions, expectations, and my goals, I chose income method number 5, a ratio call spread used in the context of the married put. It takes in the lowest net credit, but it gives us the best potential maximum return. Let's take a look. But first, let's review the existing married put in the income methods. The bubbles I had shown on those 2 different income methods were showing the potential profit based on the Black-Scholes pricing model if Charles Schwab was trading at 85 on January 20th. We use the Power Options custom spread or profit and loss chart to see those values, and we can see the same with just the married put without any adjustments. That's what we call the catastrophe report that's discussed in the blueprint. If I do any adjustment, what is my new at risk? What is my potential profit or potential max profit based on my expectations, and does that meet my goals for the position? Let's take a look. The structure, just the married put by itself, we leave it alone, we do nothing. That's sort of income method number 13 as a joke, is choose to do nothing. We don't generate any income. Our upside profit potential is still infinite. If Charles Schwab's trading at 85 on the 20th of January, the total return on the stock and the decline in the put would be $110 per share, $110 per share, for a percent return of 1.3% on the cost basis. And the at-risk would remain at 474 or 5.3%. With income method number 1, we're going to generate the most premium of $1.95. The upside profit potential is capped. But the monetary return, if the stock is trading at $85 on January 20th, would be $319 per share or $319.50 for 100 shares, a 3.6% max return at $85, and we've reduced the risk down to only 3.2% from where we started at 7.1%, more than half. With that income method number 6, what happens? We take in less profit due to buying the extra call. We get $1.04 of income generated. The upside profit potential remains infinite due to that extra long call. The monetary return, if the stock's at 85, is a very respectable $229, $230 per share, or 2.6%. The new at risk is lowered down to $3.70 or 4.2%. All pretty favorable, though I'd like to do one of the 2 income methods or another one rather than leave the married put alone at this time. But another option is income method number 5, the ratio call spread. In this structure, I'm going to buy one lower strike call. In this case, the 20th of January, 82.5 call. And that's going to cost $335. But at the same time, I'm going to sell 2 higher strike calls at the 85 strike, and I'm going to generate $195 for each, meaning I'm taking in $390 total premium and paying $335 for the 82.5. This is going to give us a credit of 55 cents. By itself, this has infinite risk to the upside because we're essentially in a bull call debit spread, buying 182.5 call, selling 185 call, but selling an extra naked call as well. Let's take a look at the 2 components. The bull call debit spread. If I separated it out, I'm buying 182.5 call for $335. I'm selling 185 call at $195. This would be a net debit of $1.40. If the stock's above $85 on the 20th of January, I'm forced to deliver shares of stock at $85 to fulfill that obligation. But I can also buy shares of stock at $82.50 with that long call, so we're going to get $2.50 back. If we paid a debit of $140, we get $2.50 back. We have a max return of $110 or 78.6% on just that bull call debit spread. The other component, that extra sold call. It would be a naked call. We'd sell 185 call for 195. Well, this is going to be a high monetary requirement because this position has infinite risk to the upside. Be a relatively low yield because of that high monetary requirement, but as the stock moves up, it just keeps getting against us, going away from us, going away from us. Infinite upside risk, infinite downside risk. That's not very radioactive trading. Why would I consider this at all? Because in the context of the married put structure, this becomes a nested spread trade with no risk. The monetary requirement of that naked call is canceled. My broker would just see this as a covered call, selling one call against the 100 shares of the stock, and is protected by the far term put with a bull call debit spread. We still have the advantage of the bull call debit spread. Look at how the profits accelerate in this new structure, the married put plus the ratio call spread income method number 5, as we move from 82.50 to 85. We're gaining positive delta on the stock and the benefit of that bull call debit spread. We're effectively paid to own an 82.5 strike long call because of the ratio structure. No monetary requirement. That extra sold call is covered by the stock. It's really just an income method number 1, if you think about it. And we're still protected to the downside, but we've also lowered the risk a little bit more due to the net credit. What are the cons of income method number 5? Well, we take in the smaller net credit due to the structure itself. It does have a capped upside, similar to income method number 1. But based on my CEGA model, that's okay. Let's add that to our table and compare it with an eye to the CEGA model. We're not expecting large jumps in Charles Schwab, as is typically not the stock we see that, even though we do have bullish expectations and we've seen a strong run. We're getting income to lower the risk, and we're trying to maximize the short-term profit. And I also want beneficial management of the structure. Again, the married put by itself without an income method, no income generated, still have infinite upside profit potential. If the stock's at $85, we make $110 per share or 1.3% theoretically. The at-risk remains at 5.3%. With income method number 1, we take in $1.95. Upside profit potential is capped, but the return if the stock is at 85 was $3.19, $3.20 per share, or 3.6%, and we get the best risk reduction down to only 3.2% on the position. With income method number 6, we generated $1.04 in income because we had to buy that extra call. We leave the upside profit potential infinite. If Charles Schwab's at $85, we make around $2.30 per share or 2.6%, pretty respectable, and we've lowered the risk to 4.2%. With income method number 5, we take in that lower net credit of only 55 cents, about half of what we saw with income method number 6. The upside profit potential is capped, but the monetary return if the stock is at $85 per share or close to it on the 20th of January is $4.30 per share or 4.8% on the investment. The new at risk drops slightly down to $4.19 or 4.7% on the position. Not expecting large jumps, so I don't have a mind to be concerned about the capped gain. I got some income to again lower the risk on a trade that's only been open for about 8 or 9 days. Want to maximize the short-term profit? Well, there it is, the highest potential profit and return if the stock is trading around my target price of $85 in the next 11 to 14 days. Beneficial management. What is that? Well, one of the Blueprint owners-only presentations at radioactivetrading.com, only available to Blueprint owners, of course, is 5 ways to manage income method number 5. Beyond just taking assignment on the bull call debit spread and the short call if the stock's above 85 to get sort of the return we were looking for, beyond just managing the sold call, just rolling it up via income method number 2, as we would if it was just a standard income method number 1. There's other ways we may look to control and manage income method number 5. Of course, the Blueprint discusses management techniques for all of the income methods once you get into them. But beneficial management, some more tools in my toolbox here for Blueprint owners only, 5 ways to manage income method number 5. What we saw again is radioactive trading in action, just as we did yesterday. The initial proper structure with controlled risk for uncertain markets. The thought process of income methods and adjustments that can be used in different market conditions and with different expectations for the underlying security. Applying that CEGA model to determine which income method best suits what I feel are the current conditions, my expectations going forward, and my goals for this personal radioactive trade. And beneficial ways to manage. Blueprint discusses those for various income methods. We've got a little extra kick there for some of the income methods in the members-only content. But of course, as we saw yesterday and as we continue today, that is just part of the whole story. Want the whole story? Well, that's why you need to get the Blueprint, the ins and outs of each income method beyond what you can see in these quick videos, more detail into the management, more detail into the strike selection and structure. And of course, only a few days left, a couple days left actually. We've extended the special end-of-year offer for the Blueprint through January 7th at midnight. The Blueprint, that full course on proper structure, the CEGA model for all 12 income methods that we used, chapters on combining income methods, exiting a married put, and more. If you purchase the Blueprint before tomorrow, January 7th at midnight, you'll lock in these 8 special bonuses. You'll get 2 months of the Fusion subscription for only $10 per month. That's a $118 value. You'll have access to one of the Mastery Series videos, the Foundations of Radioactive Trading, or the Forts video, for free. We'll also include a compilation of our most requested replays, the FIST video, 4 Insider Secrets of Trading. You'll also have access to the Quick Start Guide to help you eliminate guesswork on transitioning from other strategies into the married put structure and the income methods. You'll receive 1 month of power options for free, but you don't have to start that right away. That'll be waiting for you. You can start that at any time. The Blueprint is now all electronic. You'll have instant access. Once you purchase the Blueprint, you'll receive a link for our educational portal, learn.powerop.com. No waiting for shipping, no binder to flip through and carry around. Email and phone support are free. You need further explanations, clarifications on the principles, the setup, income methods, management of the income methods, or more. You can schedule a coaching session as a Blueprint owner. You can call us during market hours. You can send us an email. That's all included for the lifetime that you're a Blueprint owner. And, as we saw important, instant access to members-only content to not only help you accelerate your learning curve into the Blueprint, but some specifics and customer-related questions into the various income methods, when to use or not use, when to stop using income methods, and much more. And a 9th bonus is there as well. The Blueprint comes with a money-back guarantee. If you're not satisfied with the material in the first 20 to 40 days, you feel it's not going to meet your goals for what you want going into 2023, just let us know. We'll refund your purchase price. However, heading into uncertain markets, heading into the unknown and what we experienced in 2022, the limited risk structure in the proper structure and proper use of the 12 income methods is greatly going to help you limit risk, control risk, get income properly, potentially bulletproof the trades, and much, much more. You should seriously consider picking up the blueprint, locking in these 8 bonuses before Saturday, January 7th at midnight, and going forward into 2023, sort of limiting the volatility of the markets, muting the volatility of the markets in the proper structure, and a toolbox of 12 different income methods to use at your disposal for different market conditions after you open the proper protected structure.